you can't really control the fluctuations in the market. You can control your reactions to them. So in this particular case, my view on Bitcoin is the reason to do it is because it represents freedom and sovereignty, truth, integrity, and hope for the world. And that being the case, it's going to outlast all of us. So, I'm kind of thinking the Bitcoin goes on long after MicroStrategy's gone, and MicroStrategy, the company, probably goes on long after I'm gone. My view is, if we're remembered for advocating and accelerating the adoption of Bitcoin throughout the world, then that will have been success, and I don't really need anything else.
It's amazing.
And I'll take the beatings as they come or go in order to get to that end goal, because I'm sure it doesn't come without turbulence.
Recently, Bitcoin's value plummeted from approximately $67,000 to below $63,000 within a few hours last Friday, managing a slight rebound to $64,000, resulting in a 3.7% decrease over 24 hours. This downturn triggered a wider market slide, exemplified by a 4.4% fall in the CoinDesk 20 index, with Solana's token experiencing a notable decline of over 10%. This turbulence followed a short-lived surge fueled by optimistic Federal Reserve policies, yet the market's recovery was hampered by persistent sell-offs. Particularly, US-listed spot Bitcoin ETFs have endured 4 days of net negative flows, predominantly due to significant withdrawals from the Grayscale Bitcoin Trust. In his latest interview, Michael Saylor has given his remarks regarding Bitcoin's recent price correction and its innate volatility. Saylor remains unshaken by these short-term market movements, viewing them as inevitable fluctuations in the broader journey of Bitcoin toward widespread acceptance and stability. He also addresses the criticisms leveled against Bitcoin, such as its energy consumption and volatility, countering these by highlighting the ongoing innovations in renewable energy sources within the mining sector and the maturation of the Bitcoin market, which he believes will mitigate these concerns over time. We will now bring you clips from the interview. As we do, please take a moment to give us a like, subscribe to the channel, and turn on post notifications for more similar videos. Make sure to stick around to the end of the video, where Saylor explains why companies should invest their treasuries in Bitcoin instead of traditional assets like sovereign debt. We hope you enjoy it.
I think 2020 to 2024 was, the high uncertainty. It's like that early stage of institutional adoption, but really, we start mainstream institutional adoption, I would date it to January 2024 with the approval of the ETFs, the spot ETFs. And I think it runs, we have about a 10-year gold rush. It runs to 2034 November. Between 2024 and 2034, we will have mined 99% of all the Bitcoin. So Bitcoin becomes, for all practical purposes, fixed by November of 2024. The last 1% comes out over 100 years. Okay, so we have this 42-quarter period where at the beginning of the period...
What percentage are we at now?
Right now we're like 94%.
Wow.
So you think it's not much, but 5% is a lot over 10 years compared to 1% over 100 years. So there's actually still Bitcoin available for sale right now. The miners have to sell it. So at the beginning of this period in Q1, we're in Q1 now, if you go to January 1st, no institution could buy it even if they wanted to. It just wasn't on their radar. And so you really have 42 quarters of people learning what it is, studying it. It takes 10 hours to scratch the surface, and it takes 100 hours before you get a degree of comfort. Most people, once they get past the age of 40, they don't want to spend 100 hours learning a new thing. It's very rare. So you've got Wall Street firms spinning up massive education apparatus. You've got a whole set of stages of adoption. First, can I buy it? Then is it on the approved list for solicited sale? Then it is on the approved list for unsolicited sale. Is it marginable? Can I borrow against it? Is it optionable? Can I hedge it? Is it recommended? Is it structural? Is it built into a fund? That's like 7 layers of adoption. People take a year to think about each of those layers. There's 100 powerful entities that control huge amounts of money that will go through that in the Western world. So I think we're in this institutional education stage, and in 2034 it'll simply be the new thing. Right now it's like the scary, exotic thing for most people. Well, I think that the biggest challenge of Bitcoin is that the industry refers to it as a cryptocurrency, and oftentimes people refer to it as a digital currency, and there's a very vocal contingent that wants it to be a currency. And the rest of the world doesn't really understand money. So if you say to someone, what do you think about Bitcoin as digital currency? They say, well, I think it threatens the dollar, I hate it. If you said, what do you think about Bitcoin as digital property? I'm going to buy it instead of buying a building in Des Moines. They're like, oh, have at it. If you simply conceptualize it as property, which is store of value, all of the objections, all of the straw man objections, like it's used for money laundering, it's not legal tender, I can't buy coffee with it, it's not fast enough, it's not private. All of these things disappear because it's about as stupid as saying to Bob Kraft, you can't buy a cup of coffee with the New England Patriots by breaking off one of your tight ends, and you can't buy a cup of coffee with your building in Boston. So of course I can't. You can't buy a cup of coffee with part of a Picasso, the lower left corner either. But wealthy people have been using them as a store of value and as money for 500 years.
Meanwhile, in Argentina, the use of Bitcoin has rapidly grown, with the highest number of purchases in nearly 2 years happening in just 1 week in March. This boom in Bitcoin comes as the country faces an incredibly high inflation rate of 276%, greatly reducing the value of its currency, the peso. People are looking for safe places to keep their money, and while the US dollar used to be the favorite, the peso's recent strength and government actions are making it less attractive. Despite the president's long-term goal to use the US dollar more in Argentina, his current focus is on managing the peso's value. This situation is pushing more Argentinians towards Bitcoin, seeking it as a safer option to protect their money against the country's economic issues. Let us now return to the interview where Michael Saylor shares more of his expert insights.
Everybody looks at Bitcoin and they think, well, how do I create the next Cash App or the next mobile app or the next Fidelity or the next Coinbase or the next whatever? And they think really hard about that, or how do I topple JP Morgan? It's like, that's a very difficult thing to do. I'll give you a very simple idea. You have a treasury in your company. If you put your treasury into sovereign debt, you're going to yield 5% pre-tax, 3% after tax, and you're not going to beat the cost of capital. The cost of capital right now is 8 to 10% in the US, easy. So if that's the case, your treasury is a liability, which means that any rational person would look at you and say you should decapitalize. You should run on the minimum working capital or negative working capital, and you should run on debt. But I'll give you another idea. If you actually are investing in something you expect to go up 20 to 40% a year for the next decade, you're beating the cost of capital by a factor of 2. That means the right thing to do is go back to your venture capitalist or your bank and just raise $100 million that you don't need and buy Bitcoin with it. Because if the business you're running doesn't work, you will have a business that's growing 20 to 30% a year scalably for the next 30 years. That will work, right? You'll double the 100 million 2 times in the next 6 years. So you'll be 200, 400 million. In 6 years, when the thing that you're doing right now doesn't work, you're gonna have a business that's growing 20% a year off a $400 million base, which is a monopoly. So I think the number one, this is a simple hack, but every venture capitalist in the world is getting 2 and 20. They're getting a 2% management fee and a 20% participation. And their mandate is they have to invest in operating businesses that are private. And if they were to go and buy $1 billion of Bitcoin with limited partner capital, their limited partners would say, are you crazy? I could have bought Bitcoin. So the VC can't buy Bitcoin, which is the risk-free return of 20, 30% a year. The VC can give you the $100 million, you can buy the Bitcoin. They end up with debt in a private company. You end up with $100, $200, $500 million business growing 20, 30% a year that's scalable that you run with yourself and your CFO. It's good for them. They're going to make a fortune. They want to invest the money. The real problem in the world, and by the way, this is back to the Tao of Steve. In the Tao of Steve, there's a guy sitting on the bed and he's smoking marijuana, and someone's saying, well, you know, like, why aren't you out there doing something? He says, doing stuff is highly overrated. Okay? So here's the big idea, which is there's a couple $100 trillion of capital in the world that's debasing at 10% a year right now. And the big idea is just stop investing in toxic money, right?
While Michael Saylor remains bullish on Bitcoin, not all experienced investors share his sentiments. Jim Rogers, a well-known investor who co-founded the Quantum Fund with George Soros, has expressed strong skepticism towards cryptocurrencies, including Bitcoin. He anticipates that Bitcoin and other cryptocurrencies will eventually lose all their value and disappear. Despite Bitcoin's recent price surge to new all-time highs, Rogers remains unconvinced of its long-term value, comparing it unfavorably to tangible commodities like rice or sugar, which he believes will always hold value. He also doubts Bitcoin's potential to replace traditional safe haven assets like gold and silver, noting that most people understand and trust gold and silver more than cryptocurrencies. Rogers has consistently voiced his skepticism, previously noting the potential for government regulation or outright bans on cryptocurrencies. He also highlights broader concerns about the future of the US dollar and the potential for the next recession to be particularly severe. Rogers has never bought or sold Bitcoin, preferring to invest in gold and silver instead. Do you believe that Bitcoin could take the place of traditional safe haven assets like gold and silver, as some have suggested, or is it likely to remain as an investment that only a few people are interested in? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates from the cryptocurrency world, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support is crucial for us to continue providing in-depth content and discussions on the latest in crypto. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.